Bienvenidos a esta conferencia de prensa del Fondo Monetario Internacional sobre la actualización de las perspectivas.
A very good afternoon to all of you to this press conference for the regional outlook in Latin America and the Caribbean. We have with us Alejandro Werner, who will be pleased to address you soon. But I would like to thank you ahead of time, all of you who have sent us your various questions, I should say, ahead of time. You may continue to contact us through the Press Center. We also have a blog, which is, of course, under embargo at the moment. It'll be lifted forthwith. And so with that, I would simply start the press conference right now. Thank you, Luz Maria, for your presence, and I am pleased to review the outlook that we have to offer you for the region as of a few days ago. As you see, in Latin America and the Caribbean, and you've been following the news, no doubt, Latin America and the Caribbean has become the new COVID-19 global epicenter. The human cost has been tragic, with over 100,000 lives lost. The economic toll has also been steep. The World Economic Outlook update now estimates the region to shrink by 9.4% in 2020, 4 percentage points worse than the April projection, and the worst recession on record. In fact, 4 percentage points less than we had expected in April, and frankly, the worst recession on record. A mild recovery of plus 3.7% is projected for 2021. The rates of COVID-19 infections and deaths per capita are approaching those in Europe and the United States, with a total number of cases accounting for about 25% of the worldwide total, as we now see that in Latin America and the Caribbean. This means that countries should be very careful indeed as they consider reopening their economies and should allow evidence-based data, science, and evidence-based data to guide the process. Indeed, many countries in the region have high levels of informality, and they have also low preparedness to handle the new outbreaks, like a high occupancy of intensive care unit beds and low testing and tracing capacity. With regard to recent economic developments, weaker economic data and more protracted COVID-19 outbreaks explain the significant downward revisions compared to our April forecast. There is also, besides the downward revisions of the region, of course, a downward revision for the more advanced economies as well, compared to what we forecast back in April. The first quarter growth was worse than expected for most countries. High-frequency indicators like industrial production, electricity consumption, retail sales, and employment suggest that the decline in the second quarter will be deeper than we projected in April as well. The pandemic's still rapid spread indicates that social distancing measures will need to remain in place for a longer time, depressing economic activity in the second half of 2020 and leaving more scarring going forward. Despite this, such a difficult outlook, external financial conditions have eased in recent weeks, largely reflecting strong action by advanced economy central banks, which have allowed some countries to issue debt abroad. Seeing that, we have seen a stability and an appreciation of most of the monetary markets in the region. However, financial conditions are still tighter than before the pandemic, and are expected to remain volatile going forward. What then are our priorities in terms of policy priorities? The immediate priority for fiscal policy is to continue protecting lives and livelihoods. which, given the limited fiscal space in the region, will require reprioritizing expenditure and increasing its efficiency. And it will be most important then, I want to emphasize this, that such fiscal space as is available will have to be reprioritized, and efficiency, of course, will have to be boosted as well. Policymakers will need to find creative ways to reach different segments of society, especially where informality is high. The fallout from the pandemic and associated policy response will also raise medium-term debt sustainability concerns in several countries. Commitment to medium-term plan of fiscal consolidation and growth-enhancing structural reforms will be key to mitigate these concerns. Let me turn now to monetary policy. Monetary policy should remain accommodative given the subdued inflation outlook, negative output gaps, and elevated unemployment. Where there's a little space to reduce interest rates, then that should likely take place in the coming months. Measures to maintain employment relationships and maintain the productive structure will also be most important to avoid the closure of otherwise viable businesses. So payroll support, financing of working capital, all important in order to maintain economic growth. Finally, and turning slightly to the numbers that we've published, we're looking at a contraction for Latin America and the Caribbean in 2020 of 9.4%, recovery of 3.7% in 2021. Per countries, we're looking at 9.9% in Argentina, 3.6% Brazil, 9%, I should say, excuse me, a fall of 9% in Brazil, 3.9% in Peru, a drop of 10.5%, real GDP for Mexico. In terms of the general refinancing of the region, let me simply say that we at the IMF have moved very quickly to support our members and attend to the request for financing and emergency financing that we've channeled to our friends. Of the 70 loans approved since the pandemic began, totaling $25 billion, 17 were for countries in the region. That's a total of $5.2 billion. Additionally, access to the flexible credit line was approved for Chile and Peru and renewed in the case of Colombia. You may remember that the flexible credit line is a contingency line. The money doesn't have to be tapped. It's tapped when it's needed if conditions so demand that and financing becomes tighter. So it's there when you need it. Together with Mexico, the total backstop provided to the region through that flexible credit line amounts to $107 billion for those four countries alone. That is, those four countries of the region. Should their conditions suffer further deterioration, and for reasons such as balance of payments or others, they need official financing, they've got an overall envelope of $107 billion over the coming years. Thank you, Luz Maria. That's the summary I wanted to offer. We can move on to the questions. Thank you.
Registrará
what are the reasons for this? I would highlight two reasons. The first of these is that Latin America already was one of the regions in the world that was growing the more moderate rate. And going back to normality, Latin America will continue to be, because of the issues that we have already discussed in this forum, such as lack of productivity, rigidity in the markets, lack of investment in human capital and infrastructure, problems with regard to regulatory issues. This has resulted in the productivity and the investment to be very important constraints for the economic growth in the region. and this will continue to be so during the recovery phase. Secondly, most of the countries in the region have established, after the very important fiscal support which has been implemented in 2020, commitments for withdrawing these very important stimuli in order to limit any possible problem in the financing that might occur in those countries because of doubts regarding the sustainability of the debt. But it's also that this withdrawal of fiscal support make economic recovery to be less dynamic than it has been in other regions of the world. Okay, we move on now to some other questions going to the countries. We have some questions regarding Argentina, and we will be reading them out all together. And then I will yield the floor to you again. Esteban Grafele is asking, how do you assess Argentina's response vis-a-vis the pandemic, the increase in fiscal deficit and its funding with monetary issuance? Pablo Monteseclina as well said that the IMF reaches that very high number of GDP drop in Argentina. The unemployment number in April, 7.5%. Juliana Franco makes a similar question. Rafael Matos from La Nación asks, well, the Argentine government, there may be an exchange rate for a value net of 50 and an exit yield of 10% in order to recover sustainability. Does IMF agree with that limit? Another question from Eric Martin from Bloomberg, who is asking for an update with regard to Article 4 with Argentina. The answer regarding Argentina vis-a-vis COVID and on the score of public health, there has been a very rapid response, quite aggressive, that has allowed for Argentina to be one of the countries in the region that has indeed been able to have rates of transmission and death which are quite low as regards these indicators in the region. Obviously, these policies of social distancing, quarantine, etc., have had an important effect upon the economy. Based upon the indicators we're seeing for the months of March and April, other indicators such as, for example, power consumption or mobility indicators as a result of the information provided by various technology corporations, which indeed supplement the hard economic data. And then by way of economic outlooks and projections based on the variables of the international economy, the prices of commodities and so on, together with the guidelines we have had regarding the incipient effects of the reopening of the economies where this has already happened, some of the Asian economies and Europe as well. The economic outlook is being now built for all countries in the region, and we do likewise in the case of Argentina. Obviously, the case of Argentina is also impacted by the economic growth of neighboring countries, and together with these elements, those responsible of following the Argentine economy make this forecast for a contraction. Now we have updated the employment indicators, and that will be done when a broader review is done of the entire economic outlook for member states within the framework of the yearly meetings in October of this year. The issue as to which type of proposal may be viable from the standpoint of public debt sustainability within the framework of the negotiations undertaken by Argentina with the private creditors. I must say that the technical team has published 2 technical notes on the score of the sustainability of the debt, where basically speaking, we see indeed what is our proposal. And at this point in time, we have nothing else to add for now to these 2 technical notes. Obviously, we have good expectations and hope that soon a solution will be reached with regard to the restructuring of Argentinian debt so that they move on to the next stage where they continue to build with certain sanctity from the fiscal standpoint its public policies that will enable Argentina to go back to a pathway of sustained growth, sustaining thus and continue with the answer given to this global pandemic and its economic effects. As regards the concerns with regard to the design of economic policy vis-à-vis the COVID crisis, and in view of the difficulties faced by the Republic of Argentina by not having access to capital markets, and therefore a very substantial problem in adjusting its funding and financing beyond the domestic market, Argentina has geared its economic response by making transfers and focalized transfer programs for the groups of population which are affected the most. Obviously, in view of limitations existing, they have resorted to funding by the central bank, which has been so-called sterilized. And in view of the restrictions and the urgent need for support, this policy is indeed rational, and especially when they start to come out of this very profound phase of the pandemic, when the situation becomes normalized, in order to move on to a framework of economic sustainability that will allow to maintain the gains and achievements and deepen that which has been reached as regards declining inflation. The challenge is enormous, and the fact that we're going through a negotiation of debt structuring together with the shock of the pandemic has indeed been a tremendous challenge. With regard to Article 4 and beyond the statements by Argentine authorities in saying that soon they will be requesting an Article 4 or a program, a schedule. We are awaiting at this point in time that formal request. We hear that the authorities are now focusing on the restructuring of the debt, and once that process is finalized, then we will continue on with our dialogue, and we'll see which are the coming steps as regards the relationship of the Republic of Argentina with the IMF. Thank you, Alejandro. We move on to Mexico. We now have some questions from El Economista and El Financiero. Yolanda Morales says in autumn last year, the IMF deemed that the low growth of Mexico was based on the very high rates that they were offering. Now, after 6 months, those rates have been cut back to 5%. By doing this, one of the stoppers for growth has been removed. There is no capital exit, but 5% under an uncertain situation such as that of the U.S. election. And also Cepeda from El Financiero, as with the present loss of confidence with productive investment in Mexico, Timex will be perhaps the savior of Mexico. Mexico, among the largest economies, will be the one that will have the slowest recovery in view of the vicious circle it finds itself. With regard to the first question by Yolanda Morales, I believe that in October, what we stated was that in view of inflationary pressures, we thought that interest rates were quite high. Those high interest rates have an effect upon economic activity, undoubtedly, but hopefully we never did say that this was a very important factor as regards the low growth of Mexico. To the contrary, repeatedly, we have stated that factors limiting Mexico's growth have to do with the structural side of things rather than the monetary side of things. Of course, the monetary stance was stricter than what we thought to be adequate for that particular point in time. And in that regard, moving toward a lower interest rate was going to generate a contribution to the dynamism of the economy. But let me make it quite clear that we never thought that would be one of the most important factors limiting Mexico's economic growth. The interest rates have declined substantially in the last few months. However, the team, which is now still in Mexico, believes that this is an interest rate that, in view of the present situation and the low levels of utilization of the production factors, as well as the recession that will be impinging on the Mexican economy, and in view of the good operation of the Mexican financial markets, therefore, and this is the opinion of our experts, that the interest rate in Mexico still has a margin to continue to decline in the coming months, and in order to continue thus contributing to the extent possible to limiting the harmful effects upon the balance sheets of corporations and families, of course, where the economic situation Mexico is going through, as well as the region and the entire world, are having a tremendous impact. Most of this uncertainty is affecting indeed all of the countries in the region, and we see, such as in the case of Peru and Chile, interest rates are practically zero. In the case of Brazil, the interest rate now is of some between 2 and 3, and in Colombia is also close to those levels. So experts believe that, in fact, to the extent that these conditions prevail, the space to continue to reduce the interest rates in Mexico still exists. As regards the way in which the situation of anemia and contraction of the economy in Mexico has been made, let us recall that Mexico's economy, ever since last year, was undergoing a recession in 2019. And of course, these conditions continue to exist. And as we see, as regards confidence indicators, they have indeed become even deeper. Within this context, the news about the entry into operation of the TEMEC, the Mexico-Canada U.S. trade agreement, and the reformulation of the large corporations that do participate in the global value chains, where indeed there is an organization of the productive structures where various components for the same commodity take place in different geographical points. The reorganization that these processes will have as a result of the crisis of the COVID-19 pandemics, according to some analysts, seems to indicate that companies will have greater redundancy, and that the corporations will have to seek out that production is closer to their final consumers. And as part of this movement, which some analysts have described as going from just in time to just in case, as they say, just in time to just in case, firstly seeking efficiency but also assuredness. In this case, the entry into force of the trade agreement, as well as this movement in the global value chains, should and ought to benefit Mexico. And the more important part of those productive change in the manufacturing field should relocate from other latitudes to the Mexican territory. This is a phenomenon which we deem is indeed going to take place. We're studying it, but of course this will happen at the speed which will be quite slow. This will indeed happen throughout time, and our team and experts who are following the Mexican economy do not believe that this will have the strength to counteract the factors as a result of the loss of confidence and uncertainty, which are now impacting the contraction in Mexico and the tremendous shock of COVID itself. But thinking in terms of recovery, these experts deem that these factors will continue to exist, but they will not offset in their entirety the negative forces which are generating a contraction of investment in the Mexican economy.
Thank you very much, Alejandro. We have a couple of more questions. From Ecuador now, Mónica Orozco of El Comercio asks, what is the growth expected in Ecuador for the Ecuadorian economy for 2020 and 2021, and what would be the factors that would explain your estimate? We also have a comment on the fact that Ecuador asked for assistance from the IMF. How much more flexibility might be granted with regard to what has already been agreed? and Sebastián Angulo also of El Espresso asked a similar question. Ecuador is in fact negotiating its foreign debt at the moment, and the question is, what position do you think bondholders should have in this very delicate juncture of Ecuador's at the moment? Alejandro Werner for the answer. At this point, we have only just looked at a revision of annual estimates. This is not the entire exercise at worldwide level, changing all of the undergirding economic and financial presuppositions. We're looking only at the more major economies and then a couple of regional groups like Central America and the Caribbean. So I want to stress there has not been a specific publication, you understand, with regard to economic growth for Ecuador in 2020, to answer your question specifically. Obviously, as is the case for countries in which we did publish revisions, you can expect that had there been an estimate for Ecuador, it would certainly have been downwards. And naturally, two things: the very strong effect of the loss of oil revenue and the very hard impact of COVID-19 on your economy at the beginning of that gives us an Ecuadorian economy that is a good deal weaker than we had seen it in April. Now, following the drop in the oil prices and the hard-hit effect of COVID-19, what we see in Ecuador, no surprise, is that there was a great tightening on the capital markets among possible creditors with regard to Ecuador, therefore an impact on its external debt. A strong shock to the economy and greater difficulties, of course, to negotiate more favorable debt service terms in this complicated juncture. We do understand that the negotiations are proceeding in a constructive manner, and we expect to hear back, we hope with good news, or the indication that the end of those negotiations might be positive. At the same time, our team of the IMF is working hard with the Ecuadorian counterparts in order to wrap up a negotiation with a new agreement, I should say, with the IMF. You will recall that the previous agreement was lost in order to offer that emergency credit line, which gave Ecuador about $650 million. And at the same time, the authorities began negotiating a new agreement with the fund. You will forgive me if I don't give you any hint or any preview of what the overall amount might be or the time frame might be. That would be premature, but we're working hard on it. And as diligently as we could, and with the commitment that you can be assured the fund has in this very delicate juncture. And when it is time, the Ecuadorian authorities will let you know what the result was. Thank you. We move to Chile. Alejandro, two questions there, one from Francisco Guerrera of La Tercera, that says, in May, it was mentioned that the drop in Chile would be minus 8.5%. Now it's 7.5, minus 7.5. So that worst case scenario was revised downward. So how far do you think the GDP might go? And Montserrat Rivero of El Financiero says, how do you explain the very downward look on the estimates for Chile? There haven't really been any great inroads on fighting the pandemic, even though there's been quarantines at home. The answer: the downward revision or the downward numbers for Chile, of course, plugs into IMASEC, plugs into the rate on industrial activity, sales, jobs, approximately 1 million jobs lost in the formal and informal sectors. And so all of this together has led us, not surprisingly, to a downward revision of the growth estimates for Chile, together with a change in the hypos that we are working on and as regards the pandemic. We've seen how in Latin America it's turned out to be a great deal more difficult than expected to contain the spread of the virus. Probably in some perhaps large measure due to the large percentage of the informal sector in the economy as compared with other regions in the world. Contagion is more difficult to avoid, and as the epidemiologists say, it's been hard to flatten the curve and eventually turn it around, which is, of course, what everyone wants. So quarantining at home and social distancing, it will be kept in place very strictly for a longer term, and that inevitably will weigh on any kind of upturn in the economic activity. Now, with regard to April, back in April, the World Economic Outlook was published. What we're giving you now is just an update of that April publication, taking into account the adverse elements that we noted. We note that for Chile, there hasn't been a fulfillment of the worst-case scenario. That's one point. But I would say that while the bias of risk, the risk itself remains, and it is likely that the revision will be more downwards than upwards in October, I have to say that the risk probability is a little less than in April. We thought we might have gone down even further, but at the present time, we're seeing that the drop is not as accentuated. We see in the advanced economies that there are slightly better economic indicators than we had expected, and so the risk picture is slightly more positive, given that there is a better recovery in the advanced economies. So overall, the risk balance is a little better than we saw it in April, but we haven't actually put it in figures yet. We will do that when we look again at the World Economic Outlook as a whole. Thank you, Alejandro. We turn now to Panama. Roberto Gonzalez of La Prensa asks, what are the new estimates for growth in Panama? And what are the factors that most bear on that? And what are your recommendations in terms of how the economy might recover? Alejandro Werner. Panama is a very open economy. It is deeply entrenched in world economy in terms of logistics. At the present time, therefore, inevitably, Panama has been hit very hard, given the drop in world economic activity. We anticipate a drop of 5.9%, which is less than we see in the rest of the region, I point out. And Panama is by no means among the countries that are being hardest hit. To that extent, the contraction that we anticipate for Panama is slightly less pronounced than the average. We don't have a set figure to give you, but given the Panamanian economy that had been growing 5 and 6% on average over the last 10 years, what we see here is a very marked change, of course, a change of paradigm, no question. But as the world economy begins to improve, as economic activity globally strengthens, we anticipate that the great dynamism, the great connectivity that is characteristic of the Panamanian economy, so too will Panama grow stronger. But the rest of this year and certainly the next will be challenging. A little better in 2021. Thank you. 2 more questions in English.
Today's News Africa in Washington, D.C. He says Sub-Saharan Africa and Latin America seem to have requested more loans and received more disbursements from the IMF and other international financial institutions to combat COVID-19. Can you talk more about risks of debt insolvencies?
Yeah, I mean, obviously we are seeing debt levels all around the world growing significantly, and we're expecting the world and the advanced and emerging markets to come out of this crisis with much larger debt to GDP ratios. That puts them in a more delicate position vis-a-vis the sustainability of their debts. And that's why it will be important once that the economic process starts going back to normal, the output gap starts to close, for the countries to lay out credible strategies on how to bring back public sector deficits towards sustainable levels, and through them to stabilize their debt to GDP ratios. We have in Latin America 2 countries that were mentioned already in this press conference that are ongoing debt restructuring processes with their lenders, Argentina and Ecuador. I mean, when you look at our debt trajectories going forward, we're expecting that countries in Latin America will be able to put in place these fiscal strategies to continue to put their debts on a sustainable path, but this will be a challenging task for many of them. So we are helping countries through our technical assistance to design these programs within their fiscal responsibility frameworks, so that the markets feel reassured that the fiscal impulse that is taking place in 2020 is going to prove transitory from a medium-term perspective, and therefore countries will be able to stabilize their debt to GDP ratios in the future, and in some cases to start a gradual reduction in a few years. So that's an important question, a question that countries in the region are working through it, and it's an important constraint in their policy response to the crisis, because they don't want to get into a path that will make the recovery slower in the future and will actually hamper their growth prospects or the future growth prospects, given a potential perception of unsustainability of their debts.
Thanks, Alejandro. And just to finalize, we have a question from Eric Martin from Bloomberg. He says the IMF in May renewed Colombia's flexible credit line, and the board approved flexible credit lines for Peru and Chile. Those 3 countries plus Mexico represent all of the world's FCLs. Why has Latin America been so active with this instrument? Is it because Latin American economies have lower levels of reserves compared to other parts of the world? Or does the absence of regional mechanism like the European Stability Mechanism or Chiang Mai Initiative make Latin America more dependent on the IMF as a backstop?
Yeah, I think those are good hypotheses. I think when you look at the 4 countries in Latin America that have the FCL, one would say that all of them have a sufficient level of international reserves, but they're not excessive. So in that sense, when such a significant shock as the world financial crisis in 2008 to 2010, or the pandemic today hits these economies, they have looked for instruments to increase their financial buffers, and they have found in the flexible credit line a good instrument to do that. The case of Peru, it's interesting also in this perspective, because they do have a significantly large level of international reserves, but they still, I think, thought that given the huge shock that the pandemic represented, having an additional buffer was important. As you say, I mean, not counting with a very strong regional reserve arrangement. I mean, we have one in Latin America that is called the FLAR, but it's very, very small. And in that sense, countries do not have that kind of regional instrument to increase their buffers, and therefore they have found in the FCL like an appropriate instrument for these countries that have strong fundamentals, a strong institutional setup with independent central bank, floating exchange rates, inflation targeting schemes, and fiscal responsibility frameworks that will complement this institutional setup and years of fiscal and monetary sustainability, with an important backstop to the reserves of the central bank that will allow them to basically minimize financial volatility throughout extreme periods of international capital market uncertainty.
Thanks, Alejandro. With that, we can conclude this press briefing. Let me just remind everybody that on Monday, we'll have the regional economic outlook for sub-Saharan Africa at 8 a.m. And thank you for joining us today. Muchas gracias y seguimos.
Thank you very much indeed for being with us, and we'll stay in touch. Thank you very much.